Hello everyone, this is Aftab with a new weekly Forex forecast for gold for the week starting from 6th June 2022 and the week will end on Friday 10th June 2022. So tell me everyone, how is it going? I hope you must be doing really well and you must be enjoying the profits from the sell trades all the way from 1871, 1869 and maybe the breakout trade that I took in the live stream on Friday. So, congratulations if you made the profits. And today I'm going to analyze gold US dollar once again for the upcoming week starting from tomorrow. As promised, this video will be up by 6 p.m. my time. So, first of all, let's have a look at the gold US dollar. And if we see, every one of you know that whenever I do a fresh analysis, since like the week is almost starting from tomorrow, so I have to go for a fresh analysis because I definitely will need some fresh levels as well. So first of all, if we see this candle right here on the daily time frame, have a look at it. This candle closed bearish, but just like on Friday in the weekly roundup video, I have told you that I will be looking for this candle to close below the low of this candle. If you see, right, this one, but that wasn't the case, and obviously the candle closed above the low of the previous candle. So 1846.56, this was one of the level I have discussed. Now let's have a look at the weekly as well. Well, the weekly no doubt closed bearish, but to me I don't consider this as a bearish candle, but like it represents a trend continuation pattern. And if you know, I'm discussing this 1920 and 1950 level for quite some time now. It's almost like 2 weeks almost since I'm discussing it. On the weekly, it is showing 1962.31 at the moment. And this is like, if we see this zone right here, very, very nice resistance, if you see. And the candle that closed last week, that also closed. Let me zoom in. Actually, I said it's bearish, but well, a very tiny bearish. I shouldn't say this is a bearish because you know it just even didn't close below the low of the previous week. So on the basis of that, I'm considering this still a candle that is sort of indecision because there was some interest rate, the non-farm employment change from the New York. So obviously investors were kind of like puzzled, and luckily we took some trades, and one of the trade from 1869 that worked out really well. I have discussed last week in the weekly Forex forecast videos, right? So the daily situation is still the same right here. There are now two levels which I will be looking for, right, for long-term entry. For now, let's just delete everything and let's switch to the 4-hour time frame. Let's zoom out the chart a little bit and just see this one. If you see, this is one level, 61.8% retracement, and it will be at a price level of around 1821.28. Now, if you are following me for quite some time now, you will know that actually this level was 1818, but then we have got this a breakout as well from the level. Let me show you, right? And this breakout I already have discussed that if even if it happens, don't try to take a buy trade because at that time obviously this impulsive wave was active, and is not yet complete, right? So let's mark an area right here as well, and now let's delete this one. So just like I have told you, don't take this breakout trade because you can trap yourself in some drawdown in a trade which will give you some drawdown, right? So now, like at the moment, price is already at this 61.8% retracement of this impulsive wave. So let me study it a little bit and also try to understand the method through which I analyze these markets. So first of all, for the intraday level and the day trading level, there will be one opportunity, and that is obviously the most probable one and the most risky as well. This thing, a very nice reversal from this zone, which is 61.8% retracement of this impulsive wave. It is completing up there near 1890.58, and here we have got no doubt a lower low, a lower low right here, a lower low right here, and kind of like a channel as well. If you see, I'm roughly drawing it, but if you draw it neatly, this will be sort of a downward channel. The price breakout came down, took a retest, and seems like it's continuing back up till 1890.58. Now remember, two impulsive waves are pointing towards one same level. So this is one sort of indication for us that okay, now we can decide that gold will be going up. But my opinion is not yet clear. Let me study it a little bit more. And those of you who don't understand this strategy, this is backed up by the uh, Fibonacci and Elliott wave theory, which I have modified in such a way that it is so much useful for me. And last week it was 99% of the time, 99% accuracy rate it gave me. So at the moment, I'm not completely bullish on this one. Let's just complete it. And obviously, like it is pointing up till 1894.40, somewhere that zone. Now, the most important part right here is if you are going to take this buy trade, right? First of all, I'm not saying anyone to take a buy trade, right? This is my own opinion, and I will be doing this because obviously the long-term trade that I was supposed to take from 1821-28 at the moment, stay with me, I will be discussing that as well because I also see some downward moves as well. But let's just discuss the bullish move first, and then I will be trying to find out the reversal points and the reversal entries if we get any. So one impulsive wave right here that is going to complete near 1890. Let's delete that for now, or let's adjust it like this. So here actually I'm looking for a three drives pattern, and like this is the first drive, this will be the second drive, this is also one drive with us with a pullback, and the pullback is obviously 61.8% retracement, this one of this impulsive wave. So first drive, second drive, and the third drive. And sometime, you know, the three drives pattern will not always be an ideal one, right? The one that I usually discuss in my videos. It's every time it will not be an ideal one, and you have to practice, and you have to uh, make proper understanding of the strategy to understand the three drives pattern. So yes, this is a three drives pattern. Now, in order to trade this one, first of all, there are several ways to trade it. Let me discuss that first. The first trade opportunity obviously is on Monday, a blind buy, which I'm not going to take unless let's see that on the 1 hour. Well, on the 1 hour, this obviously will not be a blind buy because it will have a conservative stop loss of around 44 pips and a take profit of 1867. So the first trade opportunity obviously will be a buy near the same level 1850, and the TP will be let's draw Fibonacci of this one. It will be somewhere right here, so make sure to do it that way. And this will be a day trade, remember. So TP will be around 1862 or 1863, somewhere this zone. But you can also like the stop loss will be below here 1845, around 45 to 50 pips. So if you want to take your profit right here, if you want to close the deal as a day trader, obviously you can close it without moving your stop loss. But let's say if you want to wait for this whole complete C to D, which is obviously up there near what was the level? Near 1890. If you are taking still up there, then you have to move the stop loss to break even and then drag your take profit up there, right? Now, this is obviously one opportunity we have, which is highly probable at this moment on the 1 hour time frame. The other trade opportunity is, let's suppose you want to target 469 pips on this one, then you have to take a risk of 216 pips, and this is a weekly trade, right? This is a weekly trade, and still we have this threat right here. So make sure you will be trading against these bears. Now, the main thing, and that is, let's suppose if the market go up there and for some reason it stops right here, then obviously a downward move till 1840.50 on Monday and Tuesday is expected, and from there the market will try to go up. So in that case, the long-term traders whose stop losses are right here will be saved, and these traders who took buy from here, their stop loss will be hit. But if it go up there, if it gives you some reversal candles right here, then obviously you can also take a sell trade from 1868, somewhere that zone, and the take profit will be 284 pips. But for now, personally, if I give you my own opinion, is for the long term trade, definitely I will be waiting for 1821.28, and then I will take it. And the second opportunity I can avail is for the long term trades, obviously, is to take a buy from here and exit my trade at 1894. But this breakout will be very much important for me. I will be closely observing 1871 level, because just like I have told you right here, that don't take this breakout trade, and I have received like dozen of messages in which most of you have told me, just give me 1 second, it's so hot and I have to have some water because I turned off the fan for recording the video. So most of the traders I have received messages, most of the followers, they took buy trades right here. Well, If you trade like this, then please don't trade, okay? This is not the way to trade. You always have to wait for the market. You always have to wait for the market, right? So, just like I have told you, this is not a breakout zone. Well, it was 66 pips. That's fine for an intraday, but it was like a reversal zone, and I have made several videos, even just like on pound dollar. Here, when all of you were taking buy trades right here, when it dropped, it re-entered to the zone of 1.23522. Everyone was taking buy trade, and I said, don't take it. This is a tiny failure zone with us. So same was the case right here on gold. Now, obviously, if this happens, and definitely last week from 1832, if you remember, I discussed the zone with all of you. So if you take it from 1832, then obviously your eyes will be on 1912 for the week ahead. So this is one other trade opportunity. Very nice move the gold gave during the last week and the week before that as well. And even this week, this is also very much possible. Now, let's suppose if you are again, let's suppose you are looking at the screen on Monday, Tuesday, Wednesday in the upcoming week. This will also be a breakout point. 1846, let's suppose if a 1 hour candle break below this level, let me show you. If let's suppose strong bears attack the market and they close the market below 1845, then this whole profit will be all yours till 1830, 1832 zone. So if this breakout happens, you can also grab 140 pips. But again, you have to understand the breakout strategy. And if you watch my live stream, I booked around 130 pips, 100 pips from gold on the breakout trade, and that was an intraday trade. So even if you play it with a weekly time frame, still, if this breakout happens, whether it happens from here or it happens from here, there will be one situation. Let's suppose if the market go back up from here till there, then this breakout you must have to wait for the pullback, then you have to re-enter short, right, till 1830.45. But at the moment this is clearly bullish, and there is one trend line on the 4 hour which I want to show you, and that is just connect these lows. This also makes a sense. 1839 you can again take a buy from here, and then the take profit will be 1884. You can also close this deal. If you take a buy from here, you can close it 1867. So different ways of trading the gold. Now it depends on you how you trade it. You can remember, even in the bullish markets, you can trade on sell trades on gold, and obviously on the retracement you can once again take a buy trade. And those who understand this concept, remember and understand it, those who understand this concept are forever will be successful, right? Forever. So this is my little plan. I have discussed several levels. Make sure to watch this video several times. If you can write it down on a paper, that will be more easy for you. And this is it about the goal. If you have any questions, please leave them in the comment section down below. I will get back to you on that in my upcoming video. I'll see you next time. Till then, take care of yourself. Goodbye.